Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, December 17th, 2019. In this video, we'll take a look at gold and gold, silver, a couple of the precious metals, including palladium, and of course, I like to look at the U.S. dollar and euro to determine where gold might be heading. So we'll loop back to this chart. I mentioned recently I've posted a few updates on gold. It's in a consolidation range. It's really been consolidating sideways to a slightly lower and a slight downtrend for months now, going all the way back to the peak in August. So we're going to take a look at where it might go from here. Now let's just start out with the U.S. dollar real quick. UUP is a dollar ETN. You can see here we've broken this trend line. We had a break here of a smaller wedge, broke this trend line. We had a divergent high. I remain longer-term bearish, both intermediate and longer-term bearish. In fact, even short-term, it looks like we have early evidence, maybe too early, and it's certainly too early to say with confidence if a top is in. But I believe the case can be made. I've made that many times for a while now. That we're looking at UUP, the dollar. This is a dollar ETF up near these multi-year highs. They're going back to 2008, and you had these wedges. And again, we're starting to see technical breakdowns. Now I'd like to see UUP drop below that 2644 level right there. You can see it's pretty decent support, and I think that will further increase the odds that we may have quite a bit more downside to come. I also like to in tracking the dollar, I like to look at the euro-US dollar pair, because the euro is the largest component of the dollar index at over, I think it's about 57.6% or something along those lines. So well over half of the dollar index is based on just the weighting of the euro. And so so far the charts continue to firm up. We had a divergent low back here in late September, early October, that looks like, and we broke out of the minor downtrend line there, hit the secondary downtrend line, which was one of the upside targets there, tested it a few times, pulled back, and punched through it. So we had a breakout there, and the bigger picture right now, or the most important level I'm watching, is right here, about 118 or so. Right there, you can see that has been resistance now for quite a while. So I think if the euro-US dollar pair can pop through there, the more impulsively it does it, the better. The farther it puts that level in the rearview mirror, the better. And you can see these are all additional targets. So again, based on this, positive bullish divergence here, just like we had a divergent low back here at that major rally in the pair. And again, the point I do this is because when the dollar falls, that's bullish for gold. So when this pair is going up, the euro is rising against the dollar, that shows a falling dollar. So you can see all the major turns, at least in the last few years, were preceded by either divergent highs, which are bearish, or divergent lows, which are bullish. Even the little corrections along the way, I'll point it out at the time. And so we have a pretty big divergent low right here that indicates to me much more powerful trend change. Take it out to a long-term chart. Here we can even extend that trend line there. This is a key trend line right here. I expect a reaction if and when we get there. But so the euro has been in a bearish trend for many years against the dollar here, as you can see, working its way down. But it bottomed back in 2017, and just like gold, not by coincidence, gold bottomed in late 2016. There, the euro bottomed right around that time. It has been in an uptrend since then, or at least it's off those lows. So I wouldn't call this an uptrend. Gold, we have a confirmed uptrend on the long-term charts, but on the euro-US dollar pair, we have so far a first major leg up. It had a little ABC move and a leg down. So if it can reverse here and these divergences play out, as I suspect they will, we go up here, probably get a reaction off that trend line. But once we break that and then break that previous high from back here around early 2018, that will be, at that point, it'll be safe to say that the euro is in a new bull market, because you'll have a series of lower lows. Higher lows and higher highs. So right now, we can't really say that it's in a bull market. We can certainly say it bottomed back a few years ago, and it's above those lows. And we can certainly say, or at least I can, appears to be in a very bullish technical pattern. in the early stages of breaking out, but like I said, a little more work to do there on the daily. And then finally, I do this often, but there's always people coming to the site, people that might have membership that kind of check in from time to time. Some people might be gold bugs. That's all you like to trade is gold. So what I like to do from time to time is show you the impact that the dollar has on gold by simply overlaying. You can do it with the US dollar, or I like to show UDN. Sometimes UDN is the inverse dollar ETN. This is going to mirror UDN because again, when this chart is going down, the euro US dollar pair, the dollar is going up and vice versa. So you can see here going back to all the way back to '08, that's when this information, the data starts on the euro US dollar pair on this chart. But you can see there was a leg down, and when you're doing these comparisons, you want to look not at the price differential but the trend and the major inflection points. So right here the euro bottomed, euro US dollar pair, so did gold. And then they started trending up. There are periods of disconnects where you can see here where the euro was falling and yet gold continued to rally. That was at the end. Gold peaked right here. That was the end of the last bull market in 2011. But gold peaked there. The euro peaked right before it, and you can see, so pretty much very high correlation with periods of disconnects as with just about any two securities, but for the most part, look at the inflection point and look at which direction they're heading at those times. You know, major bottom there, bottom right there, and gold went up, euro was rallying, both turned right there. And lately there's been a disconnect. Gold has been rallying. This is more on recession fears, I believe, and other things. A lot of money, a steady flow has been moving into gold for the last couple of years. And again, gold has been very resilient. So now that the correlation is there, so you can imagine what this might look like in the coming years. You know, if my longer term, call for a bottom, a major trend reversal, major top in the dollar, bottom in the euro is in, and we get something like this, then we could certainly see something like this back here, something like this back here. Remember, this was when the euro US dollar was had so much stronger uptrends. Gold was in a bullish trend. And so now let's zero down to the charts of gold itself. Let me turn that off, that comparison, turn my lines back on. And now look at gold. So I'm not going to spend a lot of time on gold. We can look at all the different time frames. I'll just look at the daily and the weekly. What stands out to me is gold's, as I said, consolidating, a multi-month consolidation period. But here's a downtrend line to watch right there. A convincing upside break should be bullish. There's certainly some levels. You can see some near-term resistance levels that need to be cleared, such as at 142.85. But the more we go up from here, especially once we take out that previous high back in August, that major reaction high, that should be bullish. So there's gold. Kind of looks this way too, wedgish, if you will. Take this trend line and draw one down there, and you have a wedging type pattern. And but you also do have support. Things can go the other way. This wouldn't be the end of the world in gold, but if I really want to see it, the key levels I've already color coded yellow, and I did an update on this couple, even some static charts on gold recently. 136.58ish. I'd like to see gold hold above there. If it doesn't, I could easily see a move down here. It may come in because here's our primary, longer term uptrend line right there. And let's take a look at the weekly chart. I'll show you a couple other things there. So again, right now, do I see an actionable buy, hard buy signal on gold? No, I don't. Maybe soon. If the euro pops that level I started the video with on the daily chart, that resistance level, and gold breaks out, and both probably would around the same time. And then again, this bullish, longer-term bullish case would strengthen, I think, on a breakup of that 143-ish level. And of course, I don't want to see that go downside or the euro, turn around and not break out. So I'm getting this video out in advance just in case it all happens quickly, because sometimes that is the case. Bigger picture, gold. Again, we roll back here. There's the last bull market in gold. There was your last bear market. Here, I know I'm dragging this little cursor thing quick. Bull market, bear market, gold bottom back here in late 2015, December it was, and has been stair-stepping higher. Not in nearly as strong a bull market as it was back here, but again, making a series of higher lows and higher highs so far, which is the definition of an uptrend. So that's that, and therefore I'm viewing this consolidation just as this one was back here. Nothing goes straight up forever. I'm viewing this that was a consolidation period, and this appears to be another consolidation period, and you can see that in the last bull market as well. Gold did the same thing. It it walks up. Here we go. We expand that a little bit. Look at the last bull market. Nothing goes up forever. You have these consolidation periods along the way, stair step higher, and that's it. And then this one ended with a blow off top. And you see that sudden, you were stair stepping higher in a nice bull trend for years there, and then finally almost a parabolic, unidirectional straight up near vertical rip, and that ended with a quick sell off, as blow off tops usually do. The volume was also indicative of a blow off top. When you see after a very extended run, you see a big surge in volume on a near vertical rip like that. That's usually what they call a buying climax, or a blow off top. And entered a bear market, kind of grinded around. We weren't in a bear market yet, but once this consolidation period broke, and again, it was a year and a half, just like the stock market now. I do this analysis. When you look at the weekly charts, even some of the developments on the daily charts, they can take many months, even years, to play out. You just have to be patient. And in that case, you could see, boom, once we broke that trading range, that the bear market was in full force at that point in time. So again, that's what happened back then, and I'm just using those analogies to say, like that consolidation period that I just highlighted back here, could have went either way. Maybe that was a high level, could have been a high level bull market consolidation period with a breakout to the upside, but it wasn't. That determined which way gold was going to go. And the same thing I've mentioned in recent years, we've been consolidating in this period here after that bottom. So that bottom is just, to me, just like that top, followed by a period of consolidation with an upside break, an impulsive move too, just like that was impulsive coming out of there. And like then you consolidate along the way, and the trend continues. So that's it. There's my case in a nutshell from a technical and fundamental perspective. Fundamental being the case for a top in the dollar, that would be a fundamental call on gold, expecting the dollar to drop, even though it was technically based, if that makes sense. I could sit here and talk all day long why the dollar may or may not be in trouble going forward, but let the charts speak for themselves, and that's the way I see it now. And if it changes, I'll do my best to change my outlook as soon as the charts convince me to. Okay, so that's gold. Silver, let's look at silver real quick. We won't spend as much time. Let's just look at the daily chart here. Same story. Silver's been stair-stepping higher in what appears to be a bullish. Right now, you can't argue that that's still not in a bullish trend. It's still well above the lows, and it's been stair-stepping higher, just like gold, making a series of higher lows and higher highs so far. And what stands out to me, forget about every other line you see on this chart right now. Let's just focus on the downtrend line, just like gold. We have a downtrend line, and we also have a divergent low. I could extend that there, but here's the divergence is right here. So this is really your divergence line, positive, aka bullish divergence right there. Bullish falling wedge pattern. All we need now is a nice breakout, a little catalyst to trigger a buy signal on silver. I'm not going to get into the mining stocks today, but I've said this over the years, and I've illustrated it many times overlaying the charts. The miners will follow the metals. There's no two ways about it. There are temporary disconnects where some might lag behind. You might see a rally in gold and GDX doesn't take off, or the silver mining stocks, but the correlation is almost perfect correlation. The only difference is there's you get a bigger bang for your buck trading the miners. If gold and silver rally 20%, the miners are going to rally 40-50% or more, and vice versa. It cuts the other way when they drop. So we won't get into that now, but if your preferred trading proxy is the miners, and you get these buy signals on silver and gold, you can go long GDX, SIL, or silver mining ETF. SIL is silver and SLV is silver. That's what we're working on here. SIL is a silver mining ETF. All right, and then you have SILJ, the silver mining junior stocks, and then GDXJ, the gold mining junior stocks. And there's a lot of overlap between the silver and gold miners too, because many of those companies mine both silver and gold. Just keep that in mind. Some have a higher production of silver, and they're gonna usually be those stocks you find in SIL, which is right here, and that's SIL. So constructive looking charts. I'm not going to get into the individual miners, but just wanted to show you that you know, these guys also appear to be in bull markets, and they're doing the same thing. They're following the lead of gold. GDX broke out, but as I told you guys a few weeks ago in a video, yeah, it broke out, but I said it's not going to go anywhere. It's not going to go very far without gold confirming. So miners kind of got ahead of themselves here, anticipating a breakout in gold that didn't happen. So what happened is they back tested the breakout, had another leg up, but they're stalling out, and that's going to be the case unless gold and silver start to move. There's only so much upside in the miners, so that's why I'm focusing so much on these guys. All right, we're going to shift gears now. Those two will tend to follow each other, gold and silver. From time to time, there is one or the other is lagging, and then it plays a game of catch-up. I pointed that out earlier this year, where gold had a really strong run. You can see back here, this is late 2018. Here's the year break right here, 2019. Gold was doing great, and I had pointed out earlier this year that silver at the same time was way down here. There's the year break right here, the beginning of 2019. Silver was actually, oh no, that's SIL, sorry guys. Same thing, here's silver. 2019, silver was back where it was at the 2018 lows, and gold was way up here. So I said I expect silver to outperform and lean towards silver mining stocks and silver over gold, and boom, it sure did. Look, that's what I call, refer to and anticipated ahead of time, a game of catch-up. And so from that point right here, in you know, around that time, I said it in May or so, silver, the metal, rallied 37% there. And what was that? I said that was late May. And gold rallied in late May, about right here up to here. Instead of 37%, it rallied 23%. That's a pretty significant outperformance. So we'll watch things like that. Those are things that go into my analysis, and so at times I might be bullish on the metals, but kind of concentrating more on one than the other. And now, speaking of metals, palladium is a precious metal, but it's also like gold and silver. It also has, you know, pretty heavy industrial applications as well. And palladium has been trading, I've noted, much more correlated with the stock market than gold, and that, you know, that's evidenced by the fact palladium's at all-time highs. And I've been highlighting this one in recent months. We've had some pullback trades, but palladium has become so far disconnected with platinum. Palladium is in the platinum group of metals. There's several, rhodium, I think, a couple of others out there. So they're very similar related metals in the same group. They both have industrial applications. Palladium and platinum are largely used in emission controls, and there's been a shortage of palladium, and it's just been in a rip-roaring bull market. But I'm showing signs of cracking now. So again, I wanted to make mention that this one can absolutely go this way if gold and silver go this way. So it's very possible and very likely, I think right now, in the very near future, I will be, have core swing or invest, trend trade positions long gold and silver when I get in, confirmation that the next leg up in the bull market has most likely started. Those signs I was just talking about there a minute ago, the breakout of those downtrend lines and other things. Also want to see confirmation with the dollar and the euro, and that might help us trigger the next buy signals in gold and silver. But likewise, this could go down, and I see that as a likely scenario. Why? Well, because gold and silver had those big run-ups earlier in the year, particularly gold over the last couple of years, for recession concerns that everybody knows now. Even if you weren't didn't pay much attention to the stock market, just about everybody's heard now this has been the longest bull market in history. So nothing goes on forever. So there's a lot of talk now, when's it going to end? So I think that's where we've seen a lot of money moving into gold, more so than the impact, certainly more so than the impact the dollar, because the dollar is still not far off all-time highs. So the move in gold has been a flight to safety bid. Now, where am I going with that? Well, if and when I should say more when the stock market does turn down and takes the next major correction, I'm talking 10% or more, you will most likely see gold get that flight to safety bid. And at that point, the stock market turns down. All of a sudden you're going to have heightened concerns about the economy slowing. Recession fears will start being, those flames will be stoked again. You'll start hearing more and more of that. Therefore, palladium will most likely fall on that fundamental reasoning. Same reason Palladium has been rising, even though gold and silver haven't for the last few months. Again, this is on economic growth. These are on the auto manufacturers currently, building new cars, and expectation if the economy is going to grow, continue to grow through 2020, which right now is the vast consensus, then you're going to see more cars built, therefore more demand for palladium, automobiles in general, not cars and trucks and all that stuff. So that's it. So those are, I'm talking fast, there are a lot of moving parts that go into this, and so I'm speaking here, I'm showing you the charts, but I'm also talking about fundamental analysis, the economy and things that are going to go on there, and it's all very interrelated. So now we could see, it is possible, because Palladium's gotten so far ahead of itself, we've had several corrections along the way, and it's a volatile security. Let me just show you how these have been. If I didn't make mention, this is PALL. This is the only ETF. Somebody asked today on the site, Randy, is there a short ETF? There was at one point. I did a Google search, and it's not. I don't pull that symbol up as being active anymore. And I'm to the best of my knowledge, at least on the U.S. markets, there's not a short ETF. The only way I know for a pure play short on Palladium is to short this ETF. There's really not anything else. If you short gold or silver via those ultra short or leverage short ETFs, they're not, like I just told you a minute ago, they may go in a different direction, and they have been moving in a different direction. So there's really no indirect or no proxy play, if you will. You either short Palladium futures or Palladium ETF, to the best of my knowledge, or you just move on and to the next one if you're not able to shorten your account. That was a 21.5% drop right there. This is all over the last year, this year in 2019. This was a 14 or so percent drop. We had a correction right here of 7%. Yet all along, it's been a bull market. So these were little corrections. So even if we get coming up just a pullback trade, you can see the gains are pretty good. They're usually double digits when you get these trend line breaks. So what I'm watching right now, as I posted recently, nice cleanup trend line, which as of today is broken. Friday we had a shot across the bow. I was out of office Friday, but I was in the morning before I left. I noticed that Palladium was up very big, and it reeked to me of a blow off top. The move that I saw on the futures before the market opened, before I left my desk, and then that day there was a huge reversal. So that big red candle, the whole story isn't there. We had a huge move up. I think it was up at 3% or so, and then ended up closing the day down pretty big. And we'll look at the futures chart in a second. It'll show you that. But either way, there it is. And I can pull this trend line a little tighter too. I could do that, and it fits well right there. So let's just leave it at that. It gives you the same net effect. We broke down. We're trading below it now. Not a very impulsive candle, and because the trend, like the stock market, has been so resilient, you probably want to give this one the benefit of the doubt. Therefore, at least as I do this video, I'm not adding this as an official trade yet. If you want to take a shot right now with stop not too far above, I think the risk reward is attractive, but I think the probability of success is not nearly as high as if we had a big red candle here, start moving away from that trend line. When I talk about risk reward, I'm talking about the amount risked if stopped out. If you took out the previous highs, you're talking they're only about 2.5% above current levels. You'd have a stop just not too far above there, maybe 3% or so from current prices. And at bare minimum, again minimum, I expect a drop of about 6.6%, almost 7% from where we're at, and quite possibly more. When I look at this chart, what stands out to me are these divergences right here. We have at this time potential negative divergence. If we turn down soon, if this breakdown sticks and we start getting some additional selling in the coming days here, then that's going to turn this PPO down right here, give us a bearish crossover, and it will have confirmed this, what I call potential negative divergence. So we got divergence here at that top, followed by that downtrend or drop right there. You had bullish divergence there, that said, go long. You had bearish divergence there, and that drop, and bullish divergence there. So these are things I'm looking at now. So it's not just the trend line break, it's the trend line break plus these multi-month divergences right here. Still a little work to be done, and so therefore if they do firm up, that tells me that a 7% drop, that would most likely just be the first target on additional downside. So it would look something like this. Probably get a reaction there. It's pretty decent support. Maybe not when this one breaks, because it's such a lopsided trade, it has been for a while, and everyone gets long, too many longs, all the shorts are blown out, and that's what leads to those quick drops, big gaps down. So especially in the early stages, so that's where you might want to, sit tight, not try to game the bounce there. It's up to you completely if and when you decide to trade this one. 156 is certainly a target right here, and then it's downtrend line. So let's just say right now, let's keep things simple. I'm going to extend this line as well. I have a trend line here. That was a downtrend line that was broken out and back tested right here. So you can see this would be a likely swing target area anywhere from that 156 down to that trend line there, and again a minimum target there if you decide to take it. Okay, enough on Palladium, the ETF. We'll just look at the weekly chart, and you can kind of see here just how strong this rally has been, and that's why if you want to play it safe, not try to catch tops and bottoms. I understand that's not everybody's style, nor should it be. I like to do that. I like to try to catch tops and bottoms. Sometimes I get burned, but the thing about it is, don't get married to it. If you take a shot here, I've had many shots, and some of these pullbacks I've caught, and quite a few looked like they were going to play out and didn't. I got stopped out. This Palladium trade probably, gosh, half a dozen times this year, and I was probably successful on 4 or 5 of those that produce much more in profits. And that's again about risk reward. Risk $1 to make 3 or more. That's the key to investing and trading. So look at what your likely profit potential is if you get it right, and that should help you determine where to have your stops. But this weekly chart, trend indicators are still bullish. They're still moving up. Divergences are not a sell signal, but if we start to get confirmation, we get this divergence confirmed on the weekly chart, in other words the PPO turns down, the potential downside on a break of this rising wedge pattern easily back there to 122.81. That would be a 32% drop. Quite likely down here, 41% drop, and I think if the market rolls over at that point, maybe Palladium starts correcting and the market goes up for a few more months. It's possible, and then when it's down here, the stock market rolls over. That would be my max downside target, and that's about a 53% drop in Palladium. So, like I like to say, the charts are dynamic, and so is my analysis. So we'll just have to, first of all, we need to get the sell signals, and then we'll go from there and try to determine, if we're just gonna, if at least me, I'll tell you what I'm doing. It's just gonna quick 10-20% pullback, 15% get out, get long for the next leg up, or prepare or plan to hold out for a lot more downside on that. Finally, and we'll wrap it up with the futures charts. I put these out this morning. What stands out to me is, let me get rid of that box right there. There it goes. Hold on one second. Okay, that little pop-up box was driving me crazy. I don't know, it turned itself on my chart. Alright, I think I have it off now. Alright, so the crosshairs, that's what we're looking at. So what stands out to me looking at this is prices are getting a little wonky lately. Palladium, it's been marching up this channel I've highlighted for quite a while. There's a couple, this is the main channel right here. We don't have a lot of reactions on the bottom part. So if you want to say this is, although I'm still using this as the midpoint of the channel, and this is the bottom, we have a few reactions there, and on price channels I like to draw that midpoint line, and you know what I need to do right now is tighten this one up, because now we've had a couple reactions. There it is. So that looks a little bit better. You kind of get the gist of it. So here's our price channel moving up, and then what stands out to me is this volatility recently. Palladium has these corrections and then starts trending up. It's somewhat volatile, but relatively consistent trend, as you can see here. Boom! This is a, I don't know, you can call it a shot across the bow. Let me just show you something. Boom! There's another one. I mentioned the other day this on PALL. Now PALL is an ETF. This is the actual futures contract here trading around the clock. We didn't have a bearish engulfing candle here, almost. We did on the ETF, and I pointed that out, but we didn't have follow through to the downside. That would have given me a sell signal had we followed through on Monday to the downside, but instead we rallied. In fact, they moved back above that drop, but look, boom, another smackdown today, and it came after a divergent high. You can see the negative divergence down here on the indicators. And so what I'm looking at here and what stands out to me when I look at this chart is that's quite often you start getting these big swings around the top. Now they do happen here. You had some big swings like that, and then the uptrend resumed. So I can't tell you definitively, okay, this is marking a top, but it seems toppish to me. This seems like, remember in the beginning of the video I showed you the blow off top in gold back in the last bull market in 2011. This looks like a blow off top. You know, you had that strong move up. You know what, let's throw up the volume here, take a look at that, and you can see these volume bars, big surge in volume. So that is indicative of a potential buying climax, and we still may have one going on. We made a new high after Friday. So let me turn those back off, and now we're at the bottom of that trend line. And as I said this morning, to be safe, since the uptrend has been so resilient lately in Palladium and the stock market hasn't rolled over, I would certainly give it an extra check mark if I had some sell signals on the market. But right now the trend is still bullish. We haven't broken those wedges that I highlighted yesterday. So if that happens, that would add an additional check mark, as would a break, I think, of Friday's lows. A break of Friday's lows will have taken us well below that price channel, and you know, there's some support along the way, but I think a pretty decent target is back here, at least down to that 1742 level if you trade futures. And again, your other option is PALL. Let's wrap it up here. It's won't go into platinum right now. To really just focus on Palladium, and I'll do a more comprehensive update if I saw a trade. Right now, like I said, I'm kind of sitting tight on the others, you know, standing aside, I should say, gold, silver, and platinum as far as the precious metals go. But Palladium, I'm gearing up for the next swing short, and I'll most likely make that an official trade too if I have a little more confidence. Right now, I don't want to jump the gun on it as an official trade because we just don't have the market cooperating or the, you know, any sell signals yet, other than just this volatility recently, and that's really not a sell signal. All right, we'll wrap it up here, and I'll post any relevant updates as I see them. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.